Welcome to TheoTrade. This is Don Kaufman. It's August 1st, 2025. Just about 40 minutes to go to the cash close here on this Friday afternoon. S&P's down over 100 handles as volatility grips hold. Look, there is a huge amount to discuss here on this TheoTrade weekend update. But predominantly, I want you to know right off the bat, some of the vol that we're seeing today, this is just a warm-up. Let me actually explain that and much more here. Let's get into it. So as I was saying a moment ago, the S&Ps are down 108, 109 handles. And looking at markets and comparing to volatility, and we're going to go in depth here about volatility. I'm going to go in depth and give you some really critical levels inside of the S&Ps here. But before I do, just on the surface here, you get the S&Ps down 111, and you immediately look over at the VIX, and it's like something snapped in the marketplace today. And it did. Then I look over at the bond market, and obviously, the bond market was actually down this morning. The employment situation, the jobs number comes out a little weak. It's not like crazy. It's not like we're losing jobs just yet, but the bonds exploded back to the upside. And I've got some different feelings on bonds here. So I'm actually going to express some of those feelings about bonds as we go along. But yeah, there's no question. Again, when you're looking at this, how aggressive some of the trade has actually become. And I'm not just, again, to look on the surface, you're like, holy crap, the market's almost down like 2% over here. That's the obvious, okay? The not so obvious part is it's doing it on absolutely, okay, huge volume, especially in comparison to the last couple of trading sessions. As I said, something broke today, and it broke in a very significant way. Volume was really picking up yesterday, but today, come on, you got 40 minutes left, a little bit after the cash close. We could explode 2.5 million S&P contracts today. And the reason that I bring that kind of contract size to your attention, okay, it's hedging activity. And that kind of hedging activity just basically screams it's on, okay? And it's one of the aspects that I turn to when, you want to try to justify some of the things you see on your screen. Well, justification, some of the price action that you're seeing on the screen, okay? I don't have to allude to much here, but that volume, okay, is really, really big, which means everybody on the professional side is out there giving it their all in terms of hedging. In fact, there were a lot of minutes going by today that were doing, clear up to like 10,000 contracts in S&Ps, okay, in a minute. It's calmed down. Don't get me wrong. Things right now, they've calmed down. We're just kind of floating around. We're waiting until, that last 20, 30 minutes of the trading session, which here it comes. We're waiting a little bit. But again, things have actually, gotten a little bit more docile. Again, it ain't over just yet. This marketplace could bid back to some degree. Again, I'm going to talk about an absolutely critical threshold that I see in the marketplace. So again, generally speaking, you see stuff like this go on, this is not going to be just like a flash in the pan. Yes, the marketplace can rally back up on Monday to some degree, based on, news over the weekend. And there's the tariff situation got a little bit better, but I've been saying for weeks, it's not going to be any more taco time. It's no more taco time. It's volatility time. And we kind of snapped back into that. Push it aside for a second. To begin with, I said volatility strikes back. Well, that's stating the obvious. What do I see? Well, initially people look at VIX, okay? And I even brought up the VIX a moment ago. Spikes by almost 25%. That's significant. I kind of tend to push that aside a little bit and actually look at the volatility futures. And the volatility futures, yeah, they're on the move. They're not exactly at session highs right now, but the volatility futures are on the move in a fairly big way, being up like 2 points. But what I really look at for volatility futures, okay, we dramatically closed the gap this week in what we term contango, okay? The contango earlier okay, in the week. In fact, when I was live on TheoTrade, I even did a session about it because it was so dramatic, okay? The contango earlier this week was like, and I'll just give you an example. It was like 19 versus, for instance, 21. Look, I know that this is total geek crap, but let me explain why it's so important. It basically meant with like 20 some odd days, okay, left to expiration, the August volatility futures, okay, let's say they were at 19, okay, and then the September volatility futures, okay, were at 21. That was literally a full, okay, 2-point gap between the two of them, which is, again, it's like a massive, massive contango. And you go, oh, what does that basically denote? It denotes like, okay, volatility is really, really low right now, okay, but just what, just 20 some odd days from now, that volatility is apparently going to be a lot higher. And what I stated earlier this week is it was, okay, one of the single largest contangos. And I literally told people, I'm like, get out of any, okay, if you're selling volatility, get out of any volatility position that you're selling volatility. Because I said volatility cannot in the short duration go any lower. Volatility hit a floor. All of a sudden, here we are, a couple of days later, okay, now we're 20, okay, and 21, 26. We've closed the gap dramatically. And in the coming days, you could even see this August volatility start to exceed it. Now, why do I care? Because it's giving me like a temperature gauge, a read, if you will, on the intensity of today's move. Like that's what this really boils down to. I don't really like if you don't understand the 19 to 21 and volatilities in contango, forget all that crap. What you need to understand, okay, the temperature of volatility right now without looking at like VIX, because VIX is just bids and offers from SPX, but the real temperature, it's a tangible tradable product. That's why I look at volatility futures. Trading 164,000 contracts of a crazy instrument, right? The volatility contracts today speak, okay, really, really loud. That's where it felt like something broke. And, with all due respect, it wasn't just like an immediate snap. All night long, these things are climbing, they're climbing, they're climbing, okay? And we're poised right now to possibly even go higher into today's close. So that is a kind of critical juncture in volatility. Moreover, take a look at the VVIX. Now, the VVIX, and this is where also, kind of feels like something snapped, okay? 1, 2, 3, 4 sessions. You have 4 sessions. You are like literally, okay, earlier this week, the VVIX was sitting at 88. Let me clarify that. The VVIX was sitting at 88. It now clipped all the way to 110. See that little red line over there? You know what that means? It means all hell is breaking loose, okay? That one caught me by surprise today. It doesn't, by the way, it doesn't matter if it closes above or below like 110. It's not necessarily like, that's just a marquee level. I actually call it, okay, the Vama zone. You get above 110 on the VVIX, and effectively what this product means is that professional trade rushed, okay, not into the VIX, they rushed into VIX options, specifically call options, because they realized the proverbial beep is hitting the fan. Take a look at VIX today, okay, because it is rocking in terms of volume, doing almost 2 million, okay, option contracts in VIX, 1.22 million of those done on the call side of things, okay. It's an intense, okay, kind of day. And again, that's why I said, today's volatility is just a warm up. You got to be like in tune with this, because what I'm pointing out right now, yes, is in hindsight. Well, the VIX spiked. Newsflash, I already knew that. Oh, and the VVIX went up. Newsflash, you could have looked at that. It's these critical levels that they're hitting, okay, that express more, okay, than just looking at them and saying like, oh, it's a 20. Oh, it's a, the VIX is almost at 21. It's more than that, okay? And what they express right now, or imply, if you will, is that this volatility, okay, just basically cracked the egg open, and it's on right now, and meaning that it's going to be sustained. As I said, even if we rally on Monday, they're going to come back around for more. That is the first thing that I wanted to cover. The next thing I want to cover, the bond market. Okay, the bond market had an immediate and violent reaction, okay, to a softer jobs number. I think the jobs number, okay, was in the neighborhood of was it 73,000? Okay, it missed. It happens from time to nobody trusts the jobs number anyway. But okay, I missed anyway. Had an immediate and violent reaction. Okay, the bonds actually rally over here. I started looking at this. Okay, and I got it. Like it rallied and then kind of been trickling up throughout the course of the day from like 115 over here to another point. Most of this price action in here, okay, it's not like, you know, oh, they're immediately pricing in lower interest rates. I mean, yes, the bonds go higher. The interest rates are going where? Lower, right? Okay, and I can even show you the interest rate associated with this. Let's actually cruise over now and just go to the 10-year. Okay, look at the 10-year today. Is that a standout? It's huge, man. Like the 10-year today traded literally from 4.4 to like pretty much 4.2. That, people, is an absolutely massive move. In fact, okay, in the kind of recent history of here, you don't see those kind of moves, which again goes to show you it's just a warm up, because the last time that you saw any interest rate product move this, okay, substantially was all the way back here into some of the April lows. Now you got to be a little bit concerned. Was that a wake-up call? Because everything that I put on this screen over here should wake you up to the recognition of, oh, beep, like it's going to get real. So that is, again, by the way, you can look back for years in interest rates. That crap is a standout. In fact, I'm actually going to move to a weekly chart because I just want you to see, like, there's been weeks, okay, that we moved a hell of a lot more. But one trading session today is just huge, okay? This is a huge move. Again, the 10-year had this monstrosity of a move. In fact, the 10-year moved, okay, in terms of ticks, the 10-year moved almost as much as the bonds, which is highly, highly unusual. Okay, I have a different take on this. I think we're actually moving into the 10-year, okay, and moving into the 30-year, not because you're like, we think interest rates are going to get cut. By the way, the probability of a cut for September soared today. It did. Like, I'm going to give you the obvious over here. Anybody can look that up, right? Anybody can look that up, but sure, what the hell, I'll show you, okay? If I scroll down, the probability of an interest rate cut in September, obviously we just had the Fed meeting this week, but in September is all the way up to almost 83%. Hold everything. Recognize it was only 37% chance of a cut yesterday. So what does the Fed actually know? Absolutely nothing. They couldn't find their own, I'll just leave it at that. So I believe, though, that the move into the bond market initially was the idea, okay, of a Fed rate cut. But the remainder of the day, I'm sorry, what this looks like duck and cover. This actually looks like people are buying bonds, okay, to reduce portfolio risk. That would be a big one, and it would stand in huge contrast to any of the trade that we've seen recently, including if you went back to like the time in April, we didn't really rally in bonds in April. That's when the market was tanking, right? We didn't really rally in bonds. In fact, we sold off in bonds. Okay, this is dangerous. Watch it in the days to come. If the bonds continue to the upside over here, okay, you're going to see those S&Ps really take a hit. Okay, moving on. The US dollar. The US dollar had a massive rally back this week, okay? But this massive rally back, with all due respect, I believe actually it was nothing more, okay, than a rip your face off rally, like a bearish bounce. Because look at the price action in here. Nothing less than stupendous moves all of a sudden pop back to the upside, and we got killed today. I'm going to actually take advantage of this, and how I'm going to take advantage of it is I went into gold and actually I bought a GLD call spread today. I think gold's actually going to crack to the upside. I think gold's going to crack to the upside, possibly in a big way. If there's any more sell side activity to the US dollar, gold's going to explode back up. Moreover, if the S&Ps get a little softer than this, gold's going to continue to explode back up. There's just not a lot of places to run to, not a lot of places to hide. And one of the things somebody asked me today is like, how come they're not running to crypto? Because crypto has correlation back to like NASDAQ in the end, right? That thing got absolutely hammered today too. So the next thing I want to cover in here, and I think that this is also important, we start looking at the advanced decline line. There's still 30 stocks that are to the upside. Just a real brief point in here. I don't like to see stuff like this. What stuff, okay, don't I like to see? You realize that the home builders, okay, are popping to the upside today. Now, granted, you're like, yeah, because interest rates are lower, and there's a housing, and there's this, and look, when people sell, I mean, when they really sell, okay, we don't discriminate. There's no discrimination in sell side activity because in the end, you're going to hit them all. You better keep that in mind because I don't think that this is a good thing that XHB, all of a sudden, you're like, yeah, we're going to buy home builders because people are getting defensive and buying bonds. Okay. Sounds ridiculous, doesn't it? But it gets even more ridiculous. Yeah, we're going to buy what? Consumer staples is interesting because this was actually up hell of a lot more today and actually faded. But consumer staples is up today, right? If you look around in here, okay, there's stuff like Costco. Nobody has touched Costco. Hold on. Nobody has touched Costco in months. Like nobody wants to touch Costco. The last 2 days has this huge bid back under it. Oh, I know. You're going to give me like a reason over here. Yeah, well, it's Walmart too. Okay. But the truth is, you hit this market and hit it hard. They're going to hit them all. Last but not least, okay, healthcare. Once again, need I reiterate, no one has wanted to touch, okay, healthcare. Why? Because it sucks, all right? That's the real reason. Like nobody's wanted to touch this because everything in there is like toxic at this point, okay, literally and figuratively, but it's up today. As I said to you, I don't look at those as positive signs. I don't care if people are like, oh, but earnings did this and tariffs did that. Please. Stop trying to attach a story. You know what a story is? Okay. It's what you tell a child. There's no story in here. What you want to see, okay, you got to look at the pure tape. You got to look at the tape and say like, holy crap, they're actually hitting the S&Ps. And when they hit them and hit them hard, okay, they hit with just, there's like indiscriminate sell side activity. And right now, okay, it's not indiscriminate. We're literally still like running around with the chicken with their head cut off like a game of musical chairs, which means the volatility is just warming up, right? Okay, I'm not even going to get into the sectors. Let's not, the obvious over here is like, look, they beat the living crap out of financials. Yay, somebody had to do it. Look how far outside the expected move is. And look, okay, stuff like Meta had such a good day yesterday, such a good day that it came all the way back, okay, to where it, basically was supposed to be. And then Amazon, and they don't even like me anymore. Microsoft, okay, almost completely closed the gap from yesterday. Okay, Apple, after being positive, okay, comes all the way back to 202. By the way, the lower edge of the expected move for Apple was 200 on the button, okay, all the way back to 202. And ironically, hits 201, which basically is the expected move in there. Crazy moves, okay? It's crazy moves. Now, here's some critical aspects. One of the things that I've been watching, okay, inside of markets is this 30-day 1 hour, okay, 30-day 1 hour. And I just want to kind of delineate this for you. So in the 30-day 1 hour, we identified this just great, if you will, okay, kind of volatility box. And I'm going to extend the volatility box out. We definitely broke the vol box, okay, right up here. And this was, somewhere around like July 22nd, 23rd. In that neighborhood right there, we broke the volatility box, okay? Take a look. We had, okay, legitimately just what? Weeks of channeling inside of this. All of a sudden, okay, in the last 24 hours, slamming right back to the base of it. So what's the cause for concern? How we close today, it's critical. And we're going to close. I'm just going to tell you right now, 20 minutes to close, but you're going to close like pretty much spot on somewhere in the 6250 range. And look, I'm just rounding it, that number, okay, give or take, but somewhere right around 6250. And that is in the ES is a critical threshold because if you cross below it, look, for those of you that are market technicians, what do you got out here? You ain't got crap until you get all the way back down to 6,000. That's the truth. Okay, there's nothing down here. This, okay, was light and fluffy. There's no real hedging activity. Light and fluffy to the upside when we broke back here a volatility box. You come off, okay, if you come off 6250, it's going to be a rough week next week. There's just no question about it. It's going to be a rough week. I am erring on the side of we are going to lose 6250. Okay, now that's an opinion at that point. I think we're going to lose 6250. It's going to be a quick run and a violent run from there down to the neighborhood here of 6050. Obviously, we're going to cross through 6100, 6050. Okay, kind of find a resting place in and around here, maybe even touch down to 6000. That's a big statement. That's 250 points. Okay, that could happen though very, very rapidly. And of course, different catalysts are going to come. Look, we've opened up again into two-sided trade. Last but not least, okay, so remember the critical threshold of 6250. Last but not least, the SPX, the mother of all products, okay? And the mother of all products, this is a pretty significant breach, okay, below expected move. Look, we've all seen bigger moves. We have all seen bigger moves, okay, just a couple of months ago. But that's a fairly significant move. This is a fairly significant move last week, just breaching to the upside, okay? But this one, it's definitely a standout. We just went for it here today to the downside to some extent. What concerns me at this point, I can see the volatility took off in VIX. But what concerns me is when I opened up the SPX, okay, I was surprised by one aspect. I was surprised that 7 days from now, okay, which is next Friday, we have an expected move of about 137 and change. Now that's not set in stone yet. That's not set. Obviously, that's going to change because the marketplace could get all kinds of crazy in the next 20 minutes. We could rally up. We could sell off. That number, though, so like, why do I care? I don't think it's big enough. I don't think it's big enough. Like 137, like, oh, we're going to move in a range of 137 points. Hello? We moved more than that today. At one point, we were down pretty much that at that point today inside of the SPX. Okay, I mean, we had a print here, 62.12, 62.12. Okay, from high to low. I mean, it's all kinds of chaos. Yesterday we closed at 63.40, traded all the way down to 62.12. These are huge moves. So in one day, we're obviously capable of moving, 120, 130 points. And you mean to tell me that all next week we're going to see about $130, $140 move? Okay, you got to be careful going in there. Right now, once again, we do not want to sell volatility. Okay, let this thing open up a little bit, let it get crazy. The one thing that I just don't want to hear next week. Okay, look, if you want to get bullish, it's fine. You take your bullish shot. You do it with defined risk. You want to get bullish, it's fine. You take your bullish trade. You do it with defined risk. That means use a spread. Okay, everything else, okay, is just lunacy at this point because you're at some critical threshold over here. And even if you put this at the odds of like 50-50, 50% chance we break to the upside, 50% chance break to the downside. Just throw that out there for a second. The downside risk is perilous versus the possibility of upside potential. That alone dictates trading strategy. I'm going to say that again because it's really important. This critical threshold right here, okay, which is somewhere right around that 6250, I fully anticipate like, okay, we could have some upside over here, right? There could be some downside, but it's not equal. Okay, if you look at this, it's not equal. That upside would be fairly limited. You can get crazy, you can get all the way back to like 63.50. I'm talking like next week. The downside could be massive. I mean, you could drop easily into the 6,000 handle or even 59.50 before we actually bounce out there. It is not an equivalent risk reward. Keep your hands and feet inside of the vehicle at all times because this volatility looks like just a warm-up lap. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.